Good evening. It's Vijay here. Today is Sunday, 15 December 2024. This is my weekly program where I talk about some issues which are affecting the markets. So on Friday we had a extraordinary day in terms of volatility where the stop losses of the punters, that is, people who had put based on previous day's high and previous day's low, got triggered on the Nifty, and there was mayhem for a long time for the first about 1.5 hours till around 11:30, and then it again went further up and down and finally closed in the green. So let us try to understand what this is all about. So this is what I call the December madness. If you just look at it on a 5 minute chart, uh, so what happened yesterday on Friday was that it opened lower, fell down like anything till around 10:30, and then it took off. And so now the difference between the low and the high was about 600 points. So if you see what happened yesterday, was there was no news. There was no news for it to actually fall down, and there was no news for it to really go up. So people lost their pants. And I have been warning in the past many times that in December, you will get one bout of volatility. Actually, we got two bouts of volatility in December. We got this somewhere in the 8th of December when the market again moved quite a bit and then closed in the green on that day. This was 8th of December. If you see here, if you see on a 15-minute chart, for instance, take 8th of December. See, it did it. What was that? Yeah, it's here. 8th of December. It opened. No, that was 5th of December. It came down and there was quite a bit of volatility. That was yeah. That was. I think what am I getting it wrong? Um, yeah, this was the 8th of 5th of December. Sorry, not 8th of December, 5th of December, where the market moved about another. I would say that date was about 500 points. Yeah, 500 points. Yesterday it moved. On Friday it moved around 600 points. So we've had already two such days where these stop losses get triggered. Now this is what I call the December madness. Now this December madness is not unique to only this December. If you go back and see last year in 2023, the madness happened on 20th of December, where the range was 506 points. So what we saw was 2.5 percentage. It was more than 2.5 percentage on that day because that was the index was much lower. So there was 506 points on 20th of December 2023. Now, if you go back further in 2022, you had a 270 point move. Actually, it fell for 3 days, but the biggest move was on 23rd December, which was 270 points. Then you go back to 2021. 2021, you had a 430 point move on a particular day in December. That was 20th December. 430 points when the Nifty was around 16,500. Then you go to 2020, you had a 645 point move on 21st of December. Again, no news. Market is going up smoothly. It suddenly cracked, and next day onwards it went up as if nothing has happened. So this is what is happening continuously. If you go to 2019, for instance, 2018, sorry, 2018, you had a 230 point fall for no reason. It fell and then it took off. The day also was a green candle. 2017, again, it just fell, bounced back, and then acted as if nothing has happened. If you go back further in 2008 for 2007, for instance, 2007 was a time when the markets between October and December moved crazily 4% almost one day per week for 15, 16 weeks. I have pointed that out. So this was 17 December, 300 point sudden fall and then did nothing and then went up. So if you go back and see, every December there is at least one major fall. I can take you back to 2006. We had a very major fall in 2006. Suffice to say, we'll just look at the last 5-6 years. Also, we have had, excepting for in 2019, I think, we have had falls of about 2.5% every December on a particular day when there is no news. Usually, the fall is happening for some strange reason between 20th and 23rd of December. Now, is it because of winter solstice? I used to wonder, because on lunar days, lunatics rule the asylum. So lunatics ruled the asylum on this Friday much earlier than the winter solstice. So what happens at this point of time usually is that most people who are not aware of it get caught, and then they panic, and then they sell off. So all the week longs will actually be out of the system now. On Friday, I assume a lot of week longs would be out because a lot of people would have put a stop loss based on the previous high on 25th December, 24,857. Low was 24,295. So break below 24,295, all the longs would have gone out. The low yesterday was 24,180, which is about 105 points below the low of the 5th December. So this is what happens if you're too much into technical analysis by the numbers. You should have a look at it macro and then wonder what one should be doing, rather than just jump at every small drop and then go and buy or sell as the case may be. I will also show you one thing. Last week, for instance, on 5th of December, this was what we call a engulfing candle. Engulfing bullish candle is supposed to be very, very bullish. People who follow candlesticks would have thought about it. And you see what happened? Finally, after that it never moved anywhere. It was stuck in the candle, in the part of the candle which was the engulfing bullish candle. And suddenly it broke that candle also. Engulfing bullish candle, if it is supposed to be very strong, this particular candle on Friday broke that engulfing candle and on the lower side. So that is supposed to be very bearish. So if you look at theoretical candlesticks patterns or theoretical technical analysis or bookish technical analysis as I call it, you would have sold out because it has broken an engulfing bullish candle. Engulfing bullish candle is bullish, very bullish sign, and this has broken that. So therefore you should sell. So it doesn't work like that in real life. See, today markets are, everybody is into technical analysis. So everybody, when it breaks down, everybody starts selling. And it breaks out, everybody starts buying. So many times it is better that one has to wait, look at the bigger pattern and see where we are. I've been mentioning that December is generally a time when things are bullish for the market. Very rarely we've had a December bearishness. We've had, it is not that, it is not there, but very rarely. So once in 20 years, we would have had a bearish December. Otherwise, even in 2022, when the market was bearish in December, it peaked out in December. December 15th was the Bank Nifty peaking out, and Nifty peaked out on December 1st. That was because it was a precursor to the Adani problem, which came out 4 weeks later. So the insiders knew there was a problem. So that time they sold off in that December. So December generally is traditionally, as I've mentioned and as I've shown, is generally a bullish month. So one should keep that in mind before jumping into bearish conclusions. So now if you see this, the bullish candle, so tomorrow people expect upward gap or some very strong moves. It is not necessary that they come like that. It may come, but you should not be too theoretical to assume that it will come. Most people think it will come. So you must know that December probability is very high, a bullish probability is very high. So look for buying on the decline. That is what we have been doing. And this Friday, with God's grace, was our best intraday trades in the last few years because we were waiting for such an opportunity. I thought it will come on 20th or 21st or 22nd, but it came 1 week early. So it was Friday the 13th. Everybody panicked for no reason. Friday the 13th has got no bearing actually on what happens. Friday the 13th is as it comes once in a while based on cycles, based on the patterns of the calendar. So there's nothing new about Friday the 13th. So somewhere somebody looks at superstition and thinks it's Friday the 13th. So you have had breaking a engulfing bullish candle of the previous week. So therefore the market will go down, and people are already talking of 21,000. People just started jumping around, talking that certainly this time it will break 21,000. So we have to be very, very careful there. Now I will show you something else, something very interesting which I noticed, which many people might not have noticed, is what happens to Dow Jones. You see this Dow Jones. See, Dow Jones has been falling down for 7 consecutive days. 7 consecutive, 1, 2, 3, 4, 5, 6, 7. So if you look at Dow Jones, somebody will say the market has peaked out because Dow Jones has never fallen 7 consecutive days in the last 6 years. The last time it fell was in 2018. It has never fallen before that. If you see, only in 2018 it fell 6 days. This was in 2018, or was it 2017? No, it was somewhere in 2018, if I remember right. Anyway, that is not important right now. Yeah, let me show you 2018 if I can. Yeah, see, this was the time when Dow Jones fell 7 consecutive days. In fact, after that, it fell a couple of days and then it took off and it never saw those numbers. Never saw those numbers for a very long time. So that was in June of 2018. So the more it falls in a bullish market, that was a slightly on a bullish market, it fell down suddenly. Of course, it had not hit the new high was hit in 2018 January, but then it took off and made a double top somewhere in 4 or 5 months later. Now, if you look at Nasdaq, for instance, Nasdaq has not done any pattern like that. If you see Nasdaq has made an all-time high yesterday also on Friday. Then if you look at S&P also is in the top zone. Only Dow Jones has made this pattern, which is very unusual, but one should not read too much into that pattern because on Tuesday we have the Fed Reserve meeting and Dow Jones, because there are certain stocks which have got very heavy weight, and United Healthcare, which is being the major weight in Dow Jones, which is about the second highest weighted stock, is creating this problem. So one should be very, very careful and just, not go just by pure numbers on a 5-minute chart or a 10-minute chart or even a daily chart. If you're a day trader, okay, that is a separate thing. But you cannot see what happens in a day and project what will happen for the future, which people talk of going to 21,000. I won't be surprised if you cross 25,000 before Pongal. I've been very bullish between Deepavali and Pongal, and I expect we will cross 25,000 before Pongal. People may say it will not happen. We will see that. It's because last time it went to 24,857. People thought it would go to 25. It didn't go. So this time it will make a double top. That is what people are talking about. I personally feel the probability of it crossing 25,000 is very, very high before Pongal. Anyway, let us see what happens next week. So have a nice Sunday. This is Vijay here signing off. Please note, I am not a SEBI registered advisor. Please like, share, and subscribe if you like this kind of commentary. Thank you.